Market gain for the second straight week with the Sensex and Nifty soaring 1% each. The mid-cap index outperformed the blue chips while the Nifty bank underperformed. On this week's edition of Editors Roundtable, we decode the week's market action. We take you through the cues for the coming week. We'll put the spotlight on the auto firm's sales data and the key consumer trends. I'm Reema. With me are Prashant, Nimesh and Nigel. And joining us here in the studio for Editors Roundtable is Sandeep Tandon, founder and CIO at Quant Mutual Fund. Hi guys.
Hi.
All of you, welcome back.
Hi.
So the year started.
Yeah.
Back to work.
I think Nimesh has been here throughout. So Nimesh, tell us what happened.
Yes. So
What happened this week?
what happened this week? And I think the good part is market is happy that Nigel is back. Yesterday, first gen the Nifty rallied more than 300 points.
So Prashant is back today. So what does that tell you?
bit of global pullback. So Prashant should tell us now what to watch out for on January 18th.
You know, I was just, and Sandeep will probably weigh in, and I was making this point on closing that last couple of months, and I think we were discussing this earlier, that last couple of months people were constantly, I mean the basic view was that large caps will outperform. Yeah. And it's time to take money off mid caps and small caps and time to buy large caps. And now that we're at the cusp of a new year, we're in the new year, I mean, you know, it's those kind of high level we can have those conversations before we get into slightly micro. Yeah. I think Sandeep also maybe was, I don't know if you have any thoughts before we kind of wrap up the sort of week, Sandeep. Large caps versus mid and small caps. Large caps actually have been sold aggressively. Yeah. Mid and small caps, I mean, at least at the index level, there's been hardly any damage. Although you can find stocks to prove the point that they have corrected quite a bit, and many have corrected quite a bit. But large caps, I mean, the selling has been quite unprecedented.
Correct. So I'll give you, even last year also, if we have to talk about, most of the market participants felt that small and mid has done extremely well, and it's a great opportunity that large cap will outperform. And actually, in any risk of environment, large cap tend to outperform. But if you really look at what went wrong was September end. Okay, when China episode happened, the stimulus package, which was like a unknown risk sort of thing, you know. So since we are part of MSCI emerging market basket, money shifted. So we were beneficiary for last 4 years of China underperforming, and we were beneficiary, and the reversal start. And I think nobody, including us, nobody visualized that the shift will be so dramatic. Because in last 4 years, if you look at every time attempt has been made, people lost money in China. This time also is not any exception. Again, they have lost money, but that move was very ferocious. And that's one of the reasons a lot of selling came in the large cap, because the FIs own large cap. And I think that is also now settling down. So if you ask me, this year, I will say a lot of people talked about outperform, and I think this year, I can say with huge amount of confidence, again purely on data, that large cap and mega large cap will outperform the Nifty small and Nifty mid cap, definitely.
Wow. Oh, that's a great statement.
And coming from you,
and within that,
who's,
Sandeep,
no, I'm saying coming from Sandeep, who's been known as the small cap king, small cap,
challenge you have to ask me what happened to the Nifty in the absolute term, whether they will perform or not. Outperformance, yes. Absolute terms, we don't know.
But Sandeep, if that's the call that large caps will outperform, we've generally seen every year that the laggards of previous year turns out to be the big outperformers of the coming year. Yeah. Is that a case for this year as well, that the hated large caps, the underperformers of last couple of years will turn to be the biggest performers, because some of them are part of a large holdings as well?
So partly yes. I will say, if you recollect historically, last 3-4 years we have been talking about the admired territory stocks will not perform. It's all about hated territory, and the all hated territory stock value thesis played out. Okay. Now I think some sort of reversal is coming, where all those erstwhile admired category stocks reach neglected territory or rather hated zone, they're coming back. And they're coming back with a vengeance, okay? And that's the way I will see maybe 2025 will be all about those names which have underperformed significantly, and they are part of large cap, mega large cap, and they have underperformed Nifty also decisively. So those are the names which we think has a potential to revive if, let's say, global markets turn out to be challenging.
Okay, all right. Let's do a quick recap, Sandeep, for the week before we go forward. So for the week, someone said that you'll have the dollar index that will be at a multi-year high, 2-year high. You have the US yields that are multi-month high, and you have the crude oil prices that are a multi-week high. And yet we ended high. You'll say, what are you talking about? So the Nifty ended with a gain of close to around 1%, even though the global Q is a little bit weakish. And actually, contrary to what the expectation was, at least for this week, the mid and small caps did relatively better in comparison to the large caps. For the year, it could be a very, very different story. And I think the odds are that the large cap names will do better than mid cap, as Sandeep as well alluded to. What did well this week? Well, you had ONGC that did very, very well. Select auto names, Eicher Motors, Maruti, well, they did very, very well in trade. And Tata Motors as well bounced back, particularly on the last day of the week, was up more than 5% or thereabouts. There were hated names, Ramesh, a couple of them that have been underperforming, Bajaj Finance, Bajaj Finserv, both of them were up close to around 8%. And both those two made a good comeback. The weak links, though, for the week were the two big banking names. ICICI Bank and HDFC Bank, both of them went home with cuts of around 2.5% to around 3%. If it wasn't for them, actually, the Nifty could have been up far more, and the Nifty Bank would have done a far better performance as well. Though besides the banking index, well, you had the realty index that did see some profit taking, and the PSU-related names as well did well. So the PSC index, in fact, was up close to around 2.5% to around 3%. The trends in the economy very, very mixed. GST collections quite subdued. But you have select updates coming in from auto names, coming in from these retailers. Well, they were, in fact, very, very impressive, and those stocks did quite well. What to track from here on? I think from next week, we'll get back to full participation with regard to, the institutions coming back, foreign investors as well coming back. Q3 earnings is going to be important. The central bank action as well is going to be important. And in the next couple of weeks, we'll brace ourselves for budget 2025. So we'll be looking out, for how things shape up from here on.
So, Sandeep, as even Nigel pointed out, we saw a bit of an uptick in some of the PSU names as well. The PSU index is up almost 3.5% today, this week, so to speak. And you've been saying, as in your past interviews as well, that PSU as a theme is like a decadal theme for you, like the value investing, so to speak. How are you positioned in the PSUs now? Because I believe you've trimmed your peak positions in the PSUs, but how are you positioned for 25?
So, is that correct? So around June, July sort of thing, when we saw risk of environment coming and PSUs, obviously high beta names, okay? So we pruned down the exposure. We were very skewed, like 20-22% sort of portfolio. So we cut down 10-12%. I think it came down to 6-7%.
Right.
Post Maharashtra election, we have built our exposure. Okay. I think another 6-7% exposure we have built. So it must be around in double digits now.
Okay.
Across all the portfolio.
In the entire PSU basket.
Yeah.
Okay.
And what's the broader call on the markets now? You said large caps outperform mid caps, but can we see positive returns given the kind of news flow?
So I tell you, in our actually 2019 book being relevant, I talked about the 2025 onwards, the next round of difficult phase start for the global markets. Okay, a lot of cycles which we look at, they're going to be very. I see 2025 will be very challenging for global market. My personal view is the worry is not India. India has already corrected. In fact, I'm more constructive relative to US. The worry is US market. The complacency in US is very high. If I look at quant complacency indicator, is actually one of the lifetime high. Okay, which means people are extraordinary complacency. Money flow analytics, if I look at, extraordinary money has moved towards the US stocks. So vulnerability, if you ask me, where is there globally right now, is US. And within US, within the indices, I think it's NASDAQ. And within NASDAQ, all Tesla and NVIDIA and Apples of the world, worry is this area. So that's the reason I'm slightly more cautious. And we have pruned down our tech exposure virtually to zilch. Okay? We don't own any tech names now.
And historically, if USA, for example, is a bad year, is there any trend? How does India do? I mean, if it's meaningful, 10% plus, 15% plus kind of a down
so
phase.
India can also will follow. It can follow the indices, but it can outperform on relative basis. Okay, so maybe or underperform in that sense. Let's say US fall 15%, we might file only 5-6%. But I believe that in 2025, this is what the part of a book also we talked about. Somewhere I think by mid of 2025 or onwards, I see some amount of decoupling process will start. Okay? And that will take us to the next level going forward. If I have to talk about, let's say, when generally I say this decade belongs to India. Okay. So I see US market, which has been a driving force. India is now emerging as a secular story. It's a structural bull run. Okay, despite you can see correction, consolidation sort of thing from a short-term or let's say medium-term perspective also, but longer-term perspective, India is a secular bull story. And if US corrects more, the money flow towards India equity will be on a higher side. And that's what we see because the risk appetite for developed market is speaking out, particularly US, and liquidity cycle is virtually at the top. And reverse is India. India risk appetite is rising, liquidity, good liquidity is also rising. So I expect somewhere mid-July onwards, I see some amount of decoupling and India outperformance to re-emerge.
Just to complete that point, for the US point, one of the risks you believe is Trump and what he'll do. I mean, is that a worry, or the consensus is he's going to be positive, neutral to positive for a market like India? That seems to be the general view.
Yeah.
I don't know if you have anything different on that.
No, I think if you ask me from an India perspective, I think Trump is a good news. From long-term perspective, if one of the largest economy president is on your side, at least not from purely from all decision perspective, if he has a soft corner, I think good news for India. But the biggest risk which I look at is the polity risk, okay? The policies which are expecting that. So even we would like to be very watchful, maybe from January 20th when he takes the oath or take the charge of the office till next 2-3 months. I would like to see whatever statement he has made in the media, whether it can really play out. It looks very difficult. So I would like to see next 3-4 months and then take a bigger call on the global equities in the market, because the polity risk is the biggest, I call it perceived risk in the market.
It'll be interesting to see whether or not Trump is all talk and no action, or in fact there is action. So
Yeah.
we'll wait by for that. But one big focus point this week was the auto sales numbers. Rima, you have been on top of that. Mixed trends coming in. Let's hear about it.
Indeed. So let's dissect the December auto sales numbers for our viewers. And a lot of interesting trends have come up. So let's start with the first one, and the prominent one is that domestic two-wheeler sales have disappointed and come under pressure. So the total sales for Bajaj fell by 1%, but domestic sales down 15%. For Hero MotoCorp, domestic sales down 22%. And for TVS Motors too, while total sales are up 7%, domestic sales were absolutely flat. So what cushioned the fall in the domestic sales numbers? Well, it's exports, and exports across the board have been very strong. For Hero MotoCorp, it's a 90% jump. TVS Motors, 22%. Bajaj Auto Management was telling us that LATAM has emerged as a very strong market. The third trend is that premiumization is indeed still very much intact. Call it the K-shaped recovery, but these are Royal Enfield's numbers. So at a time when many of the two-wheelers reported a drop in their total sales, for Royal Enfield, total sales were up 25% and domestic sales too remain resilient. Another question we're asking right now is that are we seeing any green shoots of the small car segment turning around? Remember, the small car segment has been under pressure. Month after month, when we looked at Maruti small cars, which is basically the likes of your Celerio, Dzire, Ignis, Swift, Wagoner, they would report a year-on-year decline in their sales numbers. But in the month of December, Maruti small car went up by 29%. And prior to that, in every single month, there was a drop. There you have Maruti small car growth. So are we seeing any signs of a turnaround in small cars? That said, let me caveat it that Maruti small car in absolute terms, the volume at 62,300 is still the lowest that we've seen in 2024. Another trend that stays intact is SUVs. Now, SUV across the categories is still very strong. Tata Motors doesn't give you the SUV numbers separately, but about a 20% growth coming through for Maruti and M&M. Also, CV. Are we seeing any green shoots in CV? Now, these are Ashok Leyland's MHCV sales numbers. They were declining from July to October. In November and December, we've started seeing some growth, 8% up move. Even for Tata Motors, in Q2, sales were down 19%. In Q3, sales were on the flatter side. But Tata Motors management commentary, they said that, in CV, they're expecting stronger growth going into Q4. And finally, I'm going to leave you with how the stocks have performed in the last 1 year versus 3 years. So these are for, the passenger vehicle side, where Tata Motors was the big underperformer in 2024, absolutely flat. And even on a 3-year basis, it's M&M, which we've seen the strongest 3-year return. And similarly for two-wheelers, Bajaj Auto in pole position last year, but over a 3-year period, it's TVS Motors. Hero MotoCorp has been quite the laggard. So Sandeep, I see at least you don't have too many, I haven't seen a auto company in any of your funds, whether it's mid, small cap, large cap. So what is the call on auto? Do you have any exposure? If yes, which stocks, and what is the view going into this year?
We have very limited exposure in auto. We have been quite cautious about this space for a while. But today, I will not give even any weightage to the numbers. As I said, that many stocks, whether talk about even the top heavyweights auto companies, they were all corrected sharply, 20-30%. So it's a more of a pullback rally and decisive pullback rally because a lot of shorts got created, okay? And these numbers sometimes get excused. When market rebounds to bounce, some excuses are there. So I think it's a more of a pullback rally. I will like to avoid the sector given whatever noise we are seeing particularly. Look at the BYD, you know, they're the largest player in the world now, okay? If you just compare the China number, okay, within the China also 11 plants of the so-called German companies have been closed down, okay? I expect it could have even long-term have a negative impact on companies, Indian companies also who are present in China. So I like to play it safe, you know, and domestic demand also, if you look at, is declining. So when you're talking about concern on consumption, unless you see CV cycle comes back in a different
But
way.
are you seeing any green shoots in CV?
Very early stages.
Very
early stages. We like to watch for next 2-3 months. I'm optimistic on the CV cycle. Let me put it this way.
All right, Sandeep, stay with us. We're going to just take a quick commercial break here. We continue the conversation with Sandeep Tandon of Quant Mutual Fund on the other side. Stay with us.